another trading day. Time to do 55 minutes of current and relevant business conversation. That's what we do here on Business Morning. I'm Ini John Meko, and we start as usual from the global space where oil prices edged down as investors booked profits after a jump to a 7-week high during the prior session on a surprise drop in the U.S. weekly crude inventories and concerns about Ukraine's attacks on Russia's energy infrastructure that could disrupt supplies. And so we look at the numbers this morning. It's red for both Brent and WTI. For Brent, it's lost 0.14%, bringing that down to $69.21 a barrel. WTI also has a red color, 0.23% at $64.85 a barrel. Both benchmarks, however, had gained about 2.5% this week, and that's why we've seen it gone up to that $69, which is very close to $70. And then still in the oil space, but here in Nigeria, the Nigerian Upstream Petroleum Regulatory Commission, that's the NUPRC, they said that the country now has the capacity to produce 2 million crude oil barrels per day. They said this in a statement that was released, and the NUPRC explains that the figure is still 200,000 barrels short of the 2.2 million barrels that is the target of the federal government for this year, 2025, one of the parameters for the budget. The Commission also mentions that it is collaborating with industry operators, local and international service providers, and rig owners, as well as other stakeholders, in order to fully unlock the output potential of this. And that brings up the question of the quota which OPEC has given to Nigeria and this plan to exceed that. So let's have that conversation now with the Vice President, Research Economy with Financial Derivatives Company, Ifeoma Onyeje-Nwokolo. Dr. Nwokolo, good morning and welcome to the program.
Good morning, Enid.
Yeah, so I mean, it's good that we are aiming high, and I know it's the target in the budget, one of the parameters for this year, 2025. We're supposed to produce about 2.2 million barrels per day, but we also have to be responsible to the quota which OPEC has given the country. How do we balance these two stands?
Well, looking at, I would say, is an aspiration. Can we do this? Yes, we can, if the structural rigidities and bottlenecks are taken care of. Of course, the commissioner has put it out there that there are initiatives to achieve these 2 million barrels per day. And these initiatives include metering audits, which simply implies that they are going to begin to track oil production and oil losses going forward, and also increase in rig counts. Once there's an increase in rig counts, that simply means there is going to be an increase in activity, in the activities in the oil sector. And also, there's also an aspiration or initiative that there's going to be a modernized technique or to evacuate oil going forward. So these are the initiative of this particular consortium. And I know that if we're able to do all of this, of course, if we are able to walk the talk, it's not just aspiring and not doing any of this, I think we'll be able to meet up with this 2 million barrels per day, even though it's lower than the budgeted benchmark of about 2.2 that we have. But looking at OPEC quota for us, which is 1.5, honestly, let's come back to reality. The reality is that in August, we were short of OPEC quota by 4%, even though we met it in June and in July. Yes, we met it in June and July because in June and July, I think there was a crackdown in vandalism and theft. That was why we were able to meet up with this. But in August, the data that was released showed that we had, instead of 1.51 million barrels per day, we were able to meet up with just 1.43 million barrels per day, which is about 96% of OPEC quota. So the 2 million barrels per day aspiration can only be achieved if we really do something about the bottlenecks. Then if that is achieved, I think OPEC is willing or will be willing to increase our quota, because our quota will be is supposedly meant to be between 2023, I guess, to 2026. As in, after 2026, I think if we are producing above the quota, OPEC may consider increasing the quota. But be it as it may, we have seen that even though our oil production output declined, we are seeing that oil price has continued to increase. As at yesterday, this morning, it has gone up to 69 barrels.
Yeah, but it's still lower than what we have on our budgets. It's still lower than the targets on our budgets.
Of course, it's lower. We are going to start from somewhere. 2 million barrels from 1.3 million barrels is a lot. So we'll get to 200,000 barrels is minute compared. If you are able to hit 2 million barrels, is it 200,000 barrels you will not meet up with? We are still going to meet up. But the question is, when are we going to achieve these 2 million barrels? I know it's not going to be in 2025, maybe probably in 2026, you put our heart to it and begin to walk the talk. Following these initiatives that we are giving, they are all quite good initiatives. If we can keep up with that, drilling activities will actually increase. If there's an increase in rig counts, of course we know it is possible, but how long is it going to take?
Yeah, but at least, Dr. Nwokolo, we've seen a reduction in oil theft. Now, I think they say it's about 5% of our production. So that could also bring a boost to the revenue that we get from there. And it also seems like perhaps the government has its efforts in the right path. And we'll see that. But related to that, with the Dangote, Dapman, and all the oil marketers, there's the expectation that there'll be a drop in the price of petrol at the pump, but we haven't seen that yet.
Yeah, then as at mid-September, there was an announcement that, according from Dangote, that oil and PMS price has declined to about 841 Naira, but we are yet to see that implementation, and this is because there's usually a lag as to when the announcement is made and when we begin to see it reflect in pump prices. This is because some pump prices, some filling stations may still have old stocks, old inventories. Of course, you won't start selling at a loss. They are probably waiting to at least be done with the inventories they have. Perhaps when they get new stocks, I think they will follow the new pricing. But let's not forget that oil price has continued to increase to 69 barrel, and if this trend continues, we might see a reversal in PMS price going forward. But for now, I think this is what we are seeing. That's why we have not seen this reflect in the pump prices, because of the lag, the lag issue. But between now and next week, I think we'll begin to see it reflect in PMA.
All right. If we don't see it, Dr. Nwokolo, we'll come to FDC office and carry you. If we don't see it reflecting. But tell us what's going on with commodity prices. What's going on around there?
Yes, for commodity prices, we are seeing that prices are pretty stable. Yes, the price of rice increased a few days ago, but it's to 83 Naira, 83,000 per bag, but now it declined to 80,000 per bag as at yesterday. So I think prices are pretty flat, because I know a lot of things featuring in, exchange rate stability featuring in, then we have the inflation rates, and we have harvest season. have fully kicked in. So all of this, we are seeing it reflect in the prices of commodities. And let's not forget that consumption has also declined. So people are not buying as much as it should because of income constraint and very low purchasing power. So people are not really buying, and you see the market is overflooded with supply. That's why we are seeing prices stable, and we know that the trend may continue till the end of the year.
Wow! I hope it will not rob us of dirty December. But I mean, we still have time to catch up. Thank you so much, Dr. Ifeoma Nwokolo, the Vice President, Research Economics at Financial Derivatives Company.
Oh, welcome. Thank you for having me.
All right, now let's move to other issues. Bilateral trade relations between Nigeria and the United States of America climbed to nearly $30 billion last year. This is according to the U.S. Consul General in Lagos, Rick Swartz. He was speaking at an event at the country's commercial capital. The U.S. Consul General says that advancements in the business relationship with Nigeria, which is the second largest trading partner in sub-Saharan Africa, speaks volume of the partnership between the two countries. The U.S. Consul General also mentioned that Trump administration had doubled down on foreign trade and commercial diplomacy with a goal to increase U.S. exports and investments. According to him, African nations, especially Nigeria, are playing important roles for the U.S. government in reaching this opportunity. And back home here, the Central Bank of Nigeria is sending notes of caution to Nigerians against hoarding the nation's currency, the Naira, as the Yuletide season approaches. The bank's Director of Currency Operations and Branch Management Department, Mr. Sikiru Adetono, was speaking at a sensitization meeting in Abuja, and he says that such acts lead to currency scarcity and hardship for the people. He cautions that a 6-month jail period awaits those who abuse the Naira.
Senior officials of the central bank, staff, members of the National Youth Service Corps, and officials of the nation's deposit money banks at an event to enforce the need to handle the Naira. While assuring that the Naira will be available for the Yuletide season, the bank cautions against hoarding it.
As we approach the Yuletide, the bank has made significant and sufficient arrangements to ensure adequate supply of banknotes to meet demand nationwide. What is needed is proper handling to keep our notes clean and fit for use. I also acknowledge the strong partnership between the CBN and its stakeholders, including the Abuja Chamber of Commerce, in delivering this program.
Today, we begin an important journey to strengthen not only the integrity of our currency, but also the partnership that sustains our financial ecosystem. The Naira is more than a means of payment. It represents our national pride, our sovereignty, and our shared destiny as a people.
Some of the impacts of Naira abuse include increased cost of currency replacement, devaluation of the Naira's image, economic disruptions, counterfeiting, and erosion of public trust. To avoid the temptation of mishandling it, there is a call for Nigerians to use alternative payment channels.
We encourage every Nigerian to explore the numerous alternative payment channels. And from today, all Nigerians are to be advocates and ambassadors of clean Naira notes. Our Naira, our pride.
The central bank assures that it is working with other government agencies to ensure sanity in handling the Naira. Sarah Chimugu, Channels Television News.
And now, a Liquefied Petroleum Gas Association of Nigeria, they've held their 3rd annual meeting, and they're building this on the increase of consumption and adoption of clean energy in gas in Nigeria. However, unfortunately, about 75% of Nigeria, especially in the rural areas, are still being seen using dirty fuel. Well, they had a meeting, talked about the hurdles and how to overcome them. With the growing consumption of gas in Nigeria, where it's recorded that between 2007 and 2023, the consumption has grown from 50,000 metric tons to over 1.3 million metric tons, an average annual increase of more than 20%. Members of the Association of Liquefied Petroleum Gas Marketers are once again set to bring up hindrances to further adoption so experts can share possible solutions.
The critical issue in our industry today is about framework that guides our operation. It must be clearly distinguished the role of every participant. What are the role of the major producers? What are the role of retailers? And what are the role of the middlemen? So that there won't be conflicts and there will be flow of business and we continue to expand. It is also important for us to look at where do we want to be in the next 5-7 years. And that is the essence of this discussion we are having today.
The government is part of the conversation, and infrastructure requirement is top on their list.
Despite over 209 trillion cubic feet of proven natural gas reserves, Nigeria's LPG penetration remains among the lowest in sub-Saharan Africa. LPG offers a clean, efficient alternative that can improve public health, reduce deforestation, and power economic transformation. The Decade of Gas initiative recognizes LPG's potential as a transition fuel. But this does not go without challenges. The challenges are infrastructure gaps, storage, bottling, and distribution capacity are inadequate, especially in our rural areas.
The challenges are known. It's the needed action to change the status of low household penetration, despite the rapid growth of over 75% of Nigerians who still rely on solid fuels, that now remains to be seen. Well, at least Nigeria has that increase in consumption, but pushing it down, especially to the rural areas, is what remains. Another area Nigeria seems to be recording some positive moves at this time is in the cocoa area. So recently, it's been recorded that Nigeria is experiencing substantial increase in cocoa export revenue, fueled by the devaluation of the Naira and renewed global demand. Cocoa exports contributed 77% of the total agricultural export of 1.70. And there you have the states that produce cocoa, the major ones. You have Ondo topping the list, Cross River State, Oyo, Ogun, and Ekiti states. They are the major producers of cocoa in the country. And then we see that for the fourth quarter of 2024, there was a surge in export, more than 600% surge to about 1.2 trillion naira compared to what was in the previous year, that's 2023. The first quarter of 2025, however, we've seen cocoa generating 1.32 trillion naira, and that accounts for 77% of total agricultural exports. And it seems good news in this area. But I wonder, the last time we heard about a surge in the price of cocoa, we heard the farmers were not enjoying it. Let's talk to an individual who is very active in the cocoa industry in Nigeria. He joins us virtually from New York. He's the founder of International Cocoa Diplomacy, Oba Dokun Thompson. Oba Thompson, good morning and welcome to the program.
Good morning.
So we hear this good news, but sometimes we hear the good news on paper, but it may be different from the reality on ground. What's the reality on ground? Does it match up with this good news, increase in export, and so farmers and producers of cocoa should be flourishing at this time?
Actually, you're right. The good news is also reflecting on the ground in terms of the farmers enjoying the price increase. But it's not actually as a result of increase in global cocoa demand. It's actually as a result of the price hike, which happened in March of 2024. And that has continued up until this moment. It went up to as high as $12,000 per ton, and today it's just over $7,000. It's been fluctuating between $6,500 to $7,500 per ton over the last 2-3 months, and that also encouraged the young farmers to go into cocoa production, which boosted Nigeria's total output for the year ending 2024. But it's a lot more complex than how we're seeing it, because yes, in literary terms, we're looking at just the figures in terms of the pricing and the output, but we're not looking at the long term and what may happen. So we still have a long way to go. We still have a lot of...
Yeah, so I hear you mention the young people getting involved. That, of course, will get anyone excited and thinking about the sustainability, which you just talked about. And then the other factor that I believe drove this new level is the devaluation of the Naira. But we do not hope that will always, be that way. And you are worried or concerned about sustainability. With these two factors, looking at the devaluation of the Naira and the involvement of the young people, can't we find a balance as to sustainability of exports of cocoa?
No, it's not about the devaluation of the Naira. It's more of the hike in price. As I said, by January 2024, for instance, cocoa was $2,600. So it had nothing to do with Naira. But as by May of 2024, it became about $10,000 to $11,000 per ton. So it became it was like 4 to 5 times the original price, which drove people, the younger generation. We now need to be more intentional and more deliberate and all very, very strategic, because the younger generation have the capacity to ensure Nigeria continues in that trend. But the challenge here is, will they continue when that price drops? So it's not about Naira now. Let's look about the dollar figure, the foreign exchange, which is the real opportunity that cocoa brings when we're talking about raw materials, even though we need to be looking at other areas of the industry.
Okay, so I believe the devaluation of the Naira...
Yeah, the price is unsustainable as it is.
Okay, all right. So I believe the devaluation of the Naira came in at the point where, since the Naira had been devalued, it is cheaper for foreigners to now turn to Nigeria for it. So even though the price is higher globally, because of the devaluation of Naira, it's now cheaper compared to other countries. I believe that's where that came in. But I think the more worrying issue here is, as you noted, the issue of the price, which we know is not sustainable at this level. Will it drive the young people away? And you talked about intentional steps to sustain the growth and attraction of investors, especially the young people, to that sector. What do you think can be done from that perspective?
Okay. Right now, I'm also a member of the National Task Force on preparing Nigeria to be able to comply with the European Union Deforestation Regulation. That was seen as a challenge. And today, what is happening is it's giving us opportunities to be able to look into areas of creating or developing a national framework on traceability and sustainability for Nigeria's cocoa and some other commodities. What that simply translates to is that it gives Nigeria the opportunity to premiumize our cocoa or our commodities for traceability and sustainability. It also creates opportunities to now truly practice smart agriculture. And what that means is we will be able to use, Nigeria has the space technology. We have developing the apps through NASA, and we will be able to do a level of predictive agriculture whereby we can understand where pests are coming, when pests are, when there's a possibility of pest invasion, when there's also bad soil conditions. So it's all about regenerative agriculture, it's about smart agriculture. And as long as we continue to practice agroforestry And there's some incentives there. At the moment, we're exploring those areas whereby farmers can begin to take advantage of the green cover and have some sort of returns for ensuring that there's no deforestation, there's continued green cover for carbon credits. So these sort of incentives would add to opportunities that the price hike is given to this the younger generation, and this is what we need to continue and build more. And also, because it's a national framework, it also brings in the issue around data. Data would help us plan, it would help us project, it would help us address all the different kinds of issues that we have and we're trying to also resolve. The biggest challenge for Africa's cocoa is the fact of the lack of infrastructure, the lack of data. If you see, it's been predicted that Ghana is going to be overtaken by Ecuador. So these are the issues that we are seeing in West Africa. I've said the West African region, yes, is the largest producer of cocoa across the world, but that is being threatened at the moment from what's going on in South America and possibly Asia.
What about the issue of boosting productivity and seedlings? Do we have that challenge?
Yes, we do. One, the Cocoa Research Institute of Nigeria has done a lot in that area. They've come up with new series that are pest resistant, short gestation period, meaning they can fruit within 1.5 to 2 years, and also multiply their output. There's also technologies for hand pollination and stuff like that. But when you're talking research, you're also talking a lot of funds, and majority of these funds usually comes in trickles from international development organizations, and that shouldn't be the case. It should be more of us doing what is necessary, what we believe in, because it's about our own interests, it's about our economy, it's about even the livelihood of the farmers and transformation of the communities and Nigeria as a whole. So these are areas that we need a lot of investment in, and I believe there are several funds that need to be explored. The insurance companies also have a role to play, because there's so many green funds, there's so many green opportunities, and the potential to actually tap into these investments is high. But what is lacking is the understanding, and this is part of what we have been working on, to see that we allow people, corporate organizations, to understand that it is not about social responsibility, but it's about social investments that has practical return on investments.
And I guess another way of increasing return on investment will be adding value. I know that our lawmakers have recently been talking about, how raw materials should not be exported without adding at least, I think, 20%, to it. And in the case of cocoa, that's so obvious because chocolate has its seasons. But I mean, out there, it's really a big deal, only if we can add value to our cocoa before exporting them.
Okay, adding value is a very, very interesting topic. The infrastructure required to add value to that end product, which is chocolate, is extensive. In Europe, it was done across the region. So it's some area doing processing, some area converting to chocolate, some area doing that. We haven't reached that stage. But when we're looking at adding value to raw products, even when you're exporting the raw beans, value would have been added to a certain extent, possibly even 20% that you've said. So that needs to be defined, properly defined, because when you harvest cocoa, you need to ferment it, you need to dry it, then you need to bag it. So what percentage is that? And that's the primary processing. And then when you look at the secondary processing, which is converting it into industrial or secondary products like cocoa butter, cocoa liquor, or cocoa mass and cocoa powder. That's a different ballgame before you now convert to end products like chocolates or even derivatives for cosmetics or pharmaceuticals. So that's now a different thing, and that's towards the end, towards when it's been. But at every stage, there's consumption opportunities. But beyond that, there are also what I call the byproducts of cocoa or the byproducts of the agricultural industry. You know, we have the tourism opportunities, we have entertainment, we have the media, the film industry, we have merchandising. There's several areas that can be locked into cocoa industry to actually unlock that value or the potentials of it. And so the creatives has a lot of opportunities in that area within the cocoa industry. If you look at the world all over, most of these art festivals are derived from agriculture. Even in Nigeria, you have the Yam Festival. We do the Cocoa Festival in Etioni in Osun State every December. We also have the Eko Chocolate Show in Lagos. You have the Beer Festival. You have several types of festivals, and these are all derived from agricultural processes. And it's something that is still undertapped in Nigeria, and it brings in a lot of income around from tourism. And this is part of what the youths would understand, appreciate, and also get involved, because there is definitely a generational gap. And what international cocoa diplomacy tries to represent and is working on is to bridge those gaps between producing and consuming, between poverty and wealth creation or value creation, between what we will call a place of neglect or even rural and transformational. So these are all the sort of gaps that we can easily bridge to address Nigeria, that can catalyze our economy in such a manner that the communities will be fully transformed and translated to well-developed communities with the right social and physical infrastructure that would encourage more investments and more participation from the younger generation.
Yeah, and I do like the fact that you keep emphasizing the need to have the younger generation. But, I mean, once again, it gets to the issue of infrastructural development. I don't know if you saw the reports we played earlier about the gas Marketers Association. Is still infrastructure, you know, for all of that, adding value and all. But thank you so much for your time and waking up early to join this program. Founder of the International Cocoa Diplomacy, Obadokun Thompson, thank you for your views on the program.
Thank you very much.
Let's take a break now on Business Morning. When we come back, the MPC decision is still resounding, especially with the banks. They have a lot to do about it, and it will really affect their health and status. That's after the break. Please stay with us here on Business. Welcome back. It's the Business Morning here on Channels Television. It's just a couple of days since we had that decision from the MPC, 50 basis point cuts on the MPR to the joy of the real sector. And of course, the commercial banks also had 50% cut off from the CRR. Now, the countdown to March 2026 is still on. The governor of the Central Bank of Nigeria, during that meeting, the MPC meeting, announced that 14 banks have already scaled through on the recapitalization exercise. So now they have perhaps a better environment after that cuts 50% on CRL and 50 basis points on MPR for commercial banks. And we expect that, of course, to drive down to the real sector and reduce the cost of borrowing. But how will this affect the banks themselves, their operations and their health. We have Ngozi Odum, Research Associate with Cardinal Stone, joining us virtually for this conversation. Hi, Ngozi, good morning and welcome to the program.
Hi, good morning.
So there at Cardinal Stone, were you expecting this 50 basis point cut?
Yes, we largely expected a possible rate cut of 50 basis points, and that was what happened. So it was largely expected.
Oh, okay, that's nice. Now, talking about the banks, we've seen results before now, before that rate cuts. The results look better than what they were last year. Last year we saw a lot of losses. For instance, we saw for Zenith Bank, their first half 2025 earnings per share went up. Loans and advances to customers increase. We expect it to increase even more now that their CRR has been reduced and cost of funding should reduce. Cash and cash equivalent also went up more than 13%. Total assets for the first half of this year went up. Customers' deposit also went up. Also, for the first half, they do have some positives and negatives. For their gross earnings was in the negative year on year. Interest income up more than 31%. Net income up. We have Stanbic also, Stanbic IBTC for the first half. So interest income up and all of that. So we see positives for the first half. But with this cuts in CRL and MPR, how do we expect it to affect the results for the second half, or at least for the final quarter of the year?
So if you take a look at the results that we've seen so far, I think something that is quite similar is that core earnings, which is really directly linked to interest income, was quite robust for all of the banks. You see them recording material double-digit growth in that line item. And I think that was really instrumental for, will I say, supporting banks' results for H1. As we come into H2 with the 50 basis rate cut, interestingly, in the secondary market, there has been, will I say, a repricing of assets with the expectation for a possible rate cut. So we don't think it's going to be that material. We're expecting that there could be a possible slowdown in earnings, but also you have to know that these banks too have also grown their interest earning asset base. So that's also going to provide some support in the later half of this year. We think that where we'll begin to see some material slowdown will be into 2026. Our expectations are still broadly positive for the second half. And then also, if you consider the amount of rate cut, it was not quite significant, 50 basis points to really, will I say, impact the earnings we've seen. So there's a possibility that we'll begin to see some slowdown, but we don't think it will be as material in the second half.
But I mean, you said 50 basis points is not so much. I mean, some people will argue otherwise, because some people were even looking forward to at least 25%. I mean, 25 basis points. You know, so 50 basis points for them is even a good one. But do you see this at the beginning of an easing cycle, or do you think it's just perhaps a temporal thing?
Yes, it possible signals a potential easing cycle. If you look at the macroeconomic fundamentals for Nigeria, you've seen that there has been robust improvements. Inflation is easing. We're now we've recorded surplus, and also our reserves are growing. And then also, if you look at global economies, you've also seen similar rate cuts. So it signals a potential easing in the cycle. But like I mentioned, this easing is coming, will I say, at the later part of this year. So if you look at H2, we've already recorded at least the first 2 months in H2. So the possible rate cuts will be tamer for this year. We expect more of the material impact to come into 2026, where we'll begin to see more significant slowdown in earnings from interest income line items.
Okay, so the banks are racing towards, and we know that some of the big banks, like the ones we mentioned, the Zenith and the Stanbic, and they don't have a lot of problems. But what changes do you expect as you are projecting the easing cycle to start? What do you expect from the banks, the health of the banks, the operation, especially as they race towards that March 2026?
I think that generally the banks are in a strong healthy position, especially with the CBN's directive to exit forbearance. I think they are in a stronger financial position. Also, in terms of the health of the bank, in terms of their credit risk access, I think they also put them in a stronger position. So for the banks that are yet to meet the requirements, a lot of processes and strategies have already been implemented to meet the deadline, and I think they are working towards that. I think with the easing, it also puts them in a better position to reach these goals in terms of coming into the market and then seeking for funds. But I know that there have been a lot of processes, and thankfully within the banks that we cover, three of the big banks have already met their requirements, so which is a positive. I think that there is a significant expectation that they will be able to meet their requirements before March 2026.
So what can we expect more? I mean, the real sector, they're just happy about this cut because they feel that there should be more money going to their sector. Do you see that? Do you see the banks able to increase lending with this lower interest rate?
Yes, I think it would incentivize people to come in to also seek lending. At this rate, it's still, high for the private sector, but with the possible signal for potential additional rate cuts, yes, is a great one. And then this could also incentivize real creation, especially in the private sector, manufacturing especially. But I think what banks will also be trying to gauge is to balance the risk-off trade-off, creating credit while also managing their credit risk. So those are the things that will be considered. So obviously, with lower interest rates, it means that borrowers are more likely to be able to repay. So that's also a positive signal for credit creation in the long term.
And I guess we should also expect more profitability from the banks for the second half.
Yes, we can expect more profitability for them in the second half. Most banks have recorded, significant increase, like I mentioned, in their first half. So even if we expect a possible slowdown in H2, their core earnings, which was quite robust in H1, will also provide that support. And also we begin to see better traction in fee-based income and their non-interest revenue line item, which is also a positive. Also, with more people coming into the financial sector and also transaction volumes increasing, this is also a positive into the later part of the year.
And but they always talk about lag when it comes to policies. So yes, we see this cut now, and hopefully we will see in the next meeting, which is in 2 months. How much time do you think we need before we actually see the impact of these cuts in interest rates and the CR out? So that's also important. How much time do you think we need before we see that translate into more economic activities for the manufacturers especially?
So it is slow and gradual. It's slow and gradual. It is not, with a stroke of a wand that it will happen. It's slow and gradual. For the rate cut MPR, there's a minimum threshold set by the CBN of 30% MPR for minimum deposits. So that will be applied. Also, when you come into the system, obviously is the risk based on each bank and their risk management framework that will determine the rates that they give you for lending out, but this is a guidance, right? So the implementation will be gradual. Yeah, so we do expect to see that coming. And I also mentioned, will be more gradual into H2, so you might not see the materiality of it on its books, but it will become more evident as we enter into 2026.
What can investors in banking stocks expect? I mean, we see the markets these days, that hasn't been so vibrant. And then what's your outlook for earnings?
I think our outlook for banks' earnings is that we came from, a volatile time where we had the FX impact and then the impact on FX-induced gains for banks' earnings. And now we've also seen CBN directives to exit forbearance. I think what we're expecting is that going into 2026, we're beginning to see a normalization in earnings, an earnings base that is not really characterized by FX-induced gains, a more resilient balance sheet because banks have exited their forbearances or are in line to exit their forbearances based on CBN directives. So that puts banks in a better position. Is there some expectation that we'll begin to see some slowdown in earnings? That is also could be a possibility, especially as interest rate cuts become more prominent. But we think that the health of the bank is still very resilient, and that is what we'll be seeing going into 2026, a more normalized bank earnings that is devoid of, will I say, volatilities or one-off income line items.
All right, thank you so much, Ngozi Odum, Research Associate with Cardinal Stone. Thank you for your time.
Thank you.
Now let's fly out of the continent and head to the global space and see what's happening with global news with Ladi Williams. Ladi?
All right, thank you, Edie. Yeah, definitely. There's a lot playing out already in the global space at this time, and we're going to be tracking all of that. But let's start off with in Czech Republic. Now we see the Czech National Bank, they held their key policy rate steady at 3.5%, and that was yesterday, matching the forecast from all 16 analysts polled by LSEG, which rose 7.8% year-on-year in the second quarter, above its own projections, and leaves little room for monetary easing. While many analysts expect rate cuts next year in that country, the CNB signaled that a hike remains a possibility, underscoring its focus on inflation risk and labor market pressures. We know the central bank's always looking for stability when it comes to prices and also the jobs market. Then we see in Mexico, the inflation quickened to 3.7% year-on-year in the first half of September, up from 3.5% the month earlier, though still within the central bank's 2 to 4% target range. The reading, just shy of analysts' 3.8% forecast, was driven largely by a jump in non-core inflation. Despite the uptick, Banxico is widely expected to follow through with a 25 basis point rate cut, and that's coming later today, lowering its benchmark rate to about 7.50% as it continues its easing cycle. Then on the company side, we see Apple. We see they've urged the European Commission to repeal or scale back the Digital Markets Act as a DMA, arguing the regulation is creating business challenges and hurting user experience in Europe. In comments submitted as the Commission reviews the law's impact, the iPhone maker claimed the DMA is hindering product innovation and warned that its enforcement is already affecting how customers interact with Apple's services. Now we see Moody's ratings have upgraded Costa Rica's long-term issuer and debt ratings to BA2 from BA3 and revised the outlook to stable from positive, citing stronger fiscal performance and resilient economic growth. The agency highlighted the government's adherence to spending ceilings, debt reduction from 67.6% of GDP in 2021 to 59.8% in 2024, and improving debt affordability as key drivers of the upgrade. Moody's also raised the country's local and foreign currency ceilings, underscoring confidence in Costa Rica's fiscal consolidation and medium-term growth prospects. And to social media now, Meta platforms, Instagram has surpassed 3 billion monthly active users, and that's according to CEO Mark Zuckerberg, announced yesterday, marking a major milestone for the social media giants. The last update, I think that came in 2022 when Instagram crossed 2 billion users. Acquired by Meta for $1 billion in 2012, Instagram has since grown from a simple photo sharing app into one of the world's most influential digital platforms. And we see Oracle shares slip more than 2% at the open of trade yesterday after reports surfaced that the company is preparing a $15 billion U.S. investment-grade bond sale. According to Bloomberg, citing people familiar with the matter, that the debt offering could be split into as many as 7 tranches, including a fair 40-year bond with initial pricing talk about 1.65 percentage points above comparable treasuries. If completed, it would be Oracle's first bond sale since January. All right, let's get a check on what's playing out in the crypto market. Now we see there's a continued downturn for Ethereum, sliding to a 7-week low. According to CoinMarketCap, the retreat, driven by weak sentiment and renewed regulatory concerns, underscores the fragile state of digital assets as investors reassess risk and the liquidity across the sector there. We did see a lot of bleeding there in the crypto market earlier this week, and that has continued at this point. Seems to be giving investors a direction of what to expect with risk assets, so far. So that's what's playing out in the global space. Yeah, and so there you have it. Some markets still holding on well. In this last trading week of September, and we have a couple of days left next week. But we're seeing the crypto market there bleeding after trying to Bitcoin there trying to hit that previous high by $118,000, but it's dropped ever since the euphoria of that rate cut in the U.S. I think that's fizzled away, at this point, and now we're all listening to what Fed Chair Jerome Powell has to say about rate cuts and the job market in the U.S., going forward. So all of that sentiment seems to be dampening some risk assets, right now.
Yeah, but Ladi, let's not forget that Ethereum, for instance, has done really well this year. I mean, so people have made plans around Ethereum.
Right.
Yeah, so I mean, let's not be too harsh.
Yeah, depends on entry though. Maybe those that bought at 1,800 and rode that wave to 4,005. Those ones will be smiling.
I know, and this might just be an opportunity for some other group of investors to get on, because the recovery might just be just around the corner as we head to the end of the year. If Nigeria is expecting rate cuts, perhaps Mr. Powell can also give more rate cuts.
More rate cuts.
Exactly.
Oliver Twist and everyone at this point.
All right, Ladi, thank you so much. See you at 1:30. And just before we go, we'll tell you what's going on in the Nigerian market today. This morning, it's an early start. Well, it hasn't been very green in the market these days, but yesterday's loss was quite smaller compared to what we had, like more than 50% drop in the losses that we had, because the day before we had about 300 billion lost, but yesterday it was just about 100. This morning it's starting off in the green just like it did yesterday, but ended in the red, so I guess it's too early to predict. But you could look around. Earnings, we talked about the banks. Earnings are coming, and the expectation is that it's going to be robust and healthy, because our banks are resilient and they can withstand the storm. And now with perhaps the rate cuts in Nigeria coming into the picture, it might just be better days for both investors and the bank themselves. So perhaps look around at the NGX and see what you can get from there. But that's it on Business Morning today. Thank you so much for being a part of this program. 55 minutes of current and relevant business. Thought we'll have another episode tomorrow. But Ladi Williams will be back at 1:30 to take you around the world of business for just about 25 minutes. And I'm not signing out, but I'll see you tonight for the Stock Market Report.